Hello. So today I want to talk about marginal tax rates because no one really seems to get it, and it is commonly presented in a way that's completely wrong, especially by people having an agenda and by people who don't want you to understand what marginal tax rates actually mean. So, first of all, there's a standard deduction that anyone could claim that means that the first $12,000 that you earn, you get tax free. And that applies to pretty much everyone. And I don't just mean pretty much, I mean anyone who doesn't itemize their deductions, which is complicated and probably not for you if you're watching this video. Anyway, so what that means is if you make $12,000 or less every year, you pay zero taxes. And then the next tax bracket is 10% up to $9,700, which means that if you make $21,700, you don't just pay 10% on all of that. You pay 0% on the first 12 and then 10% on the $9,700. So total, you pay $970 in taxes. Then the next tax bracket goes up to $39,475, and I wish they would just update the levels and call it $40,000, because does it really make a difference, those $525? Anyway, so the next tax bracket is 12%, starting at $9,700 of taxable income, and it goes up to $39,475, which means that if you make $39,475, you actually don't pay 12% on all of that. So you still pay 10% on the first $9,700, and then you pay 12% on the remainder, right? So anytime you have a step up in tax bracket because you got a raise or you have a second job or something, the previous income does not get taxed any higher than what it did before. So let's say you were making $21,700 and you're now making $21,701. You're not paying 12% on all of your income. You're paying 12% on the $1 that got over. You're still paying the same 10% on the previous income. And the next tax bracket is a huge step up to 22%. And that's where the median income is actually in. So up to $84,200, you're paying 22% of your income in income tax. But that means if you do make the maximum of that, so $84,200, you still pay 10% on the first $9,700. You still pay 12% on the next about $30,000. Let's say $29,775, because clearly they chose excellent points for those tax brackets. And if you make $1 over that, you're now paying 24%, up to $160,000. Again, $160,725, because nothing can ever be even. But the point is, the first $12,000 of your income are always untaxed. The next $9,700 of your income are always taxed at 10%. And the thresholds increase if you're married. So it generally pretty much doubles. It stops doubling at, let me look here, the 35% tax rate, which for singles ends at $510,000, and if you're married, it ends at $612,000. If you're making under $200,000, it doubles if you're married. So double all the numbers that I just mentioned for the thresholds if you're married. So the other thing about the same problem is that people don't understand withholding versus taxation. So if you're employed, your employer withholds your taxes and sends them to the IRS, and then you need to file a tax return to get a refund on the taxes that you paid more than you had to. And the way withholding is calculated is if the current paycheck were your regular paycheck all throughout the year, that's what they would withhold on every paycheck. Which means if your income is very uneven, you pay very little taxes on the lower ones and you pay a lot taxes on the higher ones. So if you get a bonus, let's say you make $2,000 a month regularly, and then you get a $10,000 bonus in one of your paychecks. So in every month, the $2,000 gets taxed as if you're making $24,000 a year, which means you're paying a tax rate of slightly over 11%. Actually, slightly below 11%. And the month where you get a bonus, you're somehow making $12,000 that month. That paycheck gets taxed as if you were making $144,000 a year. And despite me just saying that, you don't get taxed as if you were making $144,000 a year. It gets withheld as if you're making $144,000 a year. And the amount that was withheld over what you were expected to pay at the end of the year, when you know what your income exactly was, that's what you get back. So if you were making $144,000 a year, you would be squarely into the 24% tax bracket. So you're likely paying more than double the rate of taxes on the paycheck where you got the bonus than you would regular. But you're still getting that back at the end of the year. And I have to stress this because all the time I hear people saying, I got my bonus, but the IRS took all of it. That's not true. The IRS is holding it for you. You're getting it back. You just need to make sure that you file a tax return that's accurate, that has all of your income in it. And so you're getting all the money back that you paid too much because the withholding is calculated as if your current paycheck is your regular paycheck. And it's even worse for people who live on commissions and have zero income one month and then 10,000 the next, and the income tax withholding is just ginormous for the month that they make a lot of money, and it's very small for the month that they make no money. But with that said, treat the withholding, the taxes that come out of your every paycheck, as if it was just a loan to the IRS. And then at the end of the year, you actually figure out how much you should have paid, and you get the rest back. Or hopefully you don't ever have to pay more, because there's different things you can do to actually tell your employer to withhold less taxes, but that's a dangerous game that I wouldn't be playing. So with that said, first of all, marginal tax rates are just for the income on top of the threshold. The first $12,000 is free. The next $9,700 is taxed at 10%. The next $29,775 is taxed at 12%. It doesn't matter if you make 100,000 or 50 million, that's the same taxes on the first whatever amount. So if you're making $50 million, you're still paying nothing for the first 12,000. You're still paying 10% on the next 9,700. It's just that after $510,300, you're paying 37%. On all the income below that, you're paying far less. And since no one makes that much money, it's usually capital gains and stocks and options and all that, on which you probably get taxed far less anyway. You probably don't have to worry about ever getting to a 37% tax rate without having a good CPA that probably reduces that quite a bit. Anyway, that's it for marginal tax rates. I hope you learned something.